There are 5 levels to stock investing, and most people are stuck on level 2 or 3 without even realizing it. So I'm gonna break down every single level, and by the end of this video, you'll know exactly where you are and what's actually keeping you from moving up. So level 1 is where almost everyone starts, and it's the level most people never leave. This person thinks that they're being responsible. So maybe they're putting the money in the savings account, or they've got it sat in some bonds, or something really simple. And to them, it feels like they're protecting their money. They're being safe. Well, actually, the reality is the complete opposite. And you might have heard me mention this before, but money sat in a savings account is actually losing you value because the interest they're giving you in the bank, 1%, maybe 2% if you're lucky, is far less than the price of everything else going up. But that's inflation, right? So if everything else is going up at one rate, but your money's only growing at that rate, your money's worth less every single year. The money you have in your account can buy less each year that goes by. So in actual fact, you're losing value here, you're losing money. So where you think you're protecting it, you're not. You've been so cautious that money's actually going away from you. You're actually having less spending power at the end of it. So if they called it that, if they didn't call it a savings account and they just called it a money losing value account, you probably wouldn't be so keen to put money in it, right? So that's why this first level here is a real trap for most people. Now, it's not because they're lazy or whatever, it's just because no one's ever shown you that. So in actual fact, we're taught that you should save, but the idea of saving is a bit of a paradox because you're losing. Really simple example, because I know some people hear the word inflation and it doesn't really make too much sense. So simple example for you. If you had £20 to go to the shop with a year ago, or 2 years ago, or 3 years ago, how much more you could have bought with that £20 than you can buy today? I mean, today, what can you get for 20 quid? It's impossible to go in the supermarket without spending 50. So that's inflation, right? The price of everything going up. Well, the £20 you had in your savings account, well, it hasn't just gone up to £50, has it? It hasn't gone up at the same rate. No, the money sitting there has stayed pretty much the same. Maybe they're giving you 1% interest. So in a real way, that's how you lose money each year, just having your money sat in a savings account. So this is the person who bought Apple stock because everybody else was, or they bought into some penny stock they heard about on TikTok, or their mate down the pub told them about a company and said it's gonna be the next big thing. So they just threw money into it. And what usually happens is eventually this person realizes the savings account isn't doing anything for them. So they decide to get into the stock market. But the way they get into it is the problem. So level 2 is the person who's actually taken action, which is great, but the way they're picking stocks is basically gambling. This person doesn't have a criteria, they don't have a filter, they don't have an exit plan, they don't even know why they bought in the first place. When their stocks go up, they feel great. When they drop, they panic and they sell. Every decision is emotional, and depending on how they're feeling that day is going to have a massive impact on the results of their investing. Now, I don't need to tell you this, that is not the right way to invest, of course. Emotions and logic do not mix, particularly when money's involved. So these people are a real risk here, because if they're basing everything on emotions, that's going to come back and bite them very, very soon. And do you know what? The funniest thing is, they actually might have made money doing this by accident, which is the worst thing that can possibly happen. Because you know this yourself. If you go to a casino and you gamble and you put all your money onto one thing, the worst thing that can happen there is that you start winning. Because what are you going to do? You're going to keep repeating it, right? And we all know the house always wins. Or if you're investing like this emotionally, it's the same thing, because by doing something pretty like random and gambling, if you will, and it actually works, that's going to reinforce to you that that's the right way to do it. So you're going to keep on following that. Well, that's obviously not sustainable. So knowing that, okay, I actually need a structure, a strategy, a system to follow, remove that. But people at this stage, they don't have access to that just yet. The most common thing I hear from people when they're at this level, when they first come to me and they say, oh yeah, but I had like a gut feeling that this was gonna do well, or I know I should be investing in that, but honestly, something's telling me I should go for this one. So I'm just gonna do that. Gut feelings have a purpose in life, absolutely, that they shouldn't come into your investing. If anything, a gut feeling, if you're gonna let it come into your investing, should talk you out of putting money into something. Never let it talk you into putting money into investment, because that's gonna be an emotional decision. Now, the interesting thing is, the jump from level 2 to level 3 actually feels like progress, but it's a trap that keeps a lot of people stuck for years. So level 3 is the person who's done the research, they've put the hours in, and they genuinely know more than most people about the stock market, but they're still not making consistent money. This person listens to Bloomberg all day, they're reading all the financial analysts' reports, they've got 20 accounts they're following on Twitter or X, they've got about 45 stocks in their portfolio because they think that that's spreading their risk. Now the problem with this is, they're drowning in information, and they're confusing that with having a strategy. More research doesn't mean better decisions. More stocks doesn't mean less risk. It means having 45 good decisions to make instead of 5. This is a core misunderstanding when it comes to risk. And I hear this from a lot of people. They think getting into more and more and more companies is spreading your risk. Well, mathematically, that's not true. That's just putting risk in more places. But if I said to you, go and pick 50 companies to invest in right now, just by the law of averages, you're gonna pick some bad ones in there, aren't you? Of course. But if I said go and pick 3, well, how much more particular and specific and fine-tuned could you make sure each of those decisions decisions are. And I actually got this from Warren Buffett. Obviously, he's an incredible inspiration in the world of investing. And he goes by this same core concept that it's much better to have far fewer investments, but much better selected. So if you're at this level, you know a lot, but you can't clearly identify your strategy in one sentence. And this is a telltale sign. If there's too much confusion going on, you haven't got a strategy, you've got chaos. The thing I see overcomplicators do the most that they think is helping them, but actually isn't, is getting far too deep in the research in terms of the analysis, reading reports, getting into politics because they think that if they truly understand global politics, they'll have a much better chance of making more money in the stock market. They read every news article out there about every company. Honestly, this is not the way to do it. In my experience, just adding loads and loads and loads more information doesn't help you in any way make better decisions. Because think about it this way. If you're just reading articles to make decisions and base your opinion, that human who wrote it has an opinion themselves. They have a bias, right, one way or another. So they would have written the article from that place. Or if you start reading lots of articles, one of two things is gonna happen there. You're either gonna read everybody having the same opinion, and that's gonna like heavily influence your decision. You're gonna think that's gospel and a fact when it's just opinion. Or you're just going to read so many different opinions that you're just going to end up more confused than ever. Because we all know you can go online and find anybody that will argue about anything because everyone's got different opinions. So you can't base your investment decisions on other people's opinions. You've got to base it on the facts, which is what I choose to do. And it's made me wildly more successful than when I used to overcomplicate things. And this is a level where most people get stuck because they feel like they're doing everything right, but there's a clear difference between knowing a lot about the market and actually having a system that makes you money. So if you're watching this and you're thinking, okay, I'm probably a level 2 or 3 and I don't actually have a real system, I run a free masterclass where I walk through my exact strategy step by step. The link's in the description. But let me show you what level 4 and 5 actually look like, because this is where everything changes. So level 4 is where you actually start making consistent money, because this is the first level where you're investing with a system instead of an opinion. This person has got a filter that they've built. They know exactly what they're looking for in a company, you know, how much profit they're making, the debts they've got, the size of the company. They know exactly which companies they would invest in and what they wouldn't, yes or no, black and white, makes it easy. They know exactly when to buy a stock, when to sell. They've got this whole system in place and they feel prepared. But the difference between a person at level 4 and a person at level 5 is that this person is still fighting the system. They know their rules, but as soon as that stock starts to drop a bit further than they anticipated, they really want to sell. Or another one of their stocks goes a lot quicker up than they thought it would and they're in more profit and they think, oh, maybe I should just sell quickly and get out of this, not follow my strategy. They've built the rules, but they're not fully committed to trusting them just yet. It honestly feels like an emotional battle. And it's something I see a lot for people who are in their first few years of investing. So you've got the system in front of you, you know exactly what you should be doing, but your gut is telling you something else. Or that little voice in your head is just saying, but on this occasion, I think I know better. It feels like an internal battle. And I know this myself because I've been there, where you know what you should do, but that little voice in your head is telling you that it knows better. And it will go back to every other time in your life where you know you should have been following a certain rule, but you did choose to use your intuition or whatever you want to call it, and the result was pretty good. And it relies on that. Your brain goes back to that and thinks, look, here's the evidence. Like when we do this in the past, this works really well for us. Which in everyday life, your survival instinct, there's a case for that. But when it comes to investing, that is not the way to be successful long term. Because this is another thing people miss out at this point. They are basing their experience and everything on a very, very small number of investments because they're probably pretty new to investing. Well, that's not the reality of someone who's been investing for 10 years, 20 years, beyond, because they've seen every possible outcome. But if someone's fairly new to it, they've only got a small data sample to go from. So they're like, oh yeah, well look, it worked before. Or, oh, you know what, I've done well so far, so let me just go a bit off the rails on this one. And what separates level 4 from level 5 is actually really simple, but it's a thing that takes the longest to form. So level 5 is where I operate now. And it's honestly not what most people expect, because it's the most boring level by far. 5 stocks at a time. I'm following my exact criteria for selecting stocks. I know when I'm going to be buying, I know when I'm going to be selling before I even put money into the investment. The system runs the same over and over again. I don't have to change anything. I just follow my strategy. Less than 5 minutes a day is easy. Doesn't matter what the market's doing, doesn't matter what they're telling us in the news. I just follow the process that has worked for so long. And most importantly, I don't override the system. I don't make exceptions, and I don't panic. These decisions were made long before I even put any money into this investment. So there's nothing I can change. I just stick to what works and I follow the rules. This is the level where investing stops being stressful and it just becomes a routine. And I tell you what, I am so grateful to have my investing at this stage now, because I've been through all of those other stages and I know how hard hard they are, and honestly how mentally draining they can be. Because if you're always thinking about your investments, or you're always worried about it, you're always trying to second guess things, it's just exhausting. So just having this clarity, this detachment from what's happening, and just the system's gonna do the work for me, that attitude, that mindset makes investing way more enjoyable and gives you a hell of a lot more peace of mind. And I can tell you the exact opposite to this, which is what I started doing in my career, which is I actually went into day trading first. So for the first number of years of my career, I was a full-time day trader, and it was the most time-intensive, mentally draining time of my life, because you're just constantly making decisions. You're constantly trying to manage your emotions, trying to make sure that you're following certain steps, trying to spot things that maybe aren't so clear to people. And it's just a very, very draining experience in general, and you're going to make mistakes. Now, when you're doing something very high risk like that, that's very fast paced, obviously the stakes are a lot higher. So any decision you make, you feel how that is different every single time. And you're trying so hard not to make errors of judgment. Well, we're only human, right? So I'm glad I had that part of my life, because I learned a lot. And that's actually why I created the VAC strategy that I teach today, because I saw how actually destructive that can be for a person to live through that life, because it was my career. And I knew the bits that I wanted to change. I wanted more time. I wanted more freedom. I wanted more headspace to just do things I actually cared about, not think about charts all day. And time was a very, very big thing for me. I think life is short, and not enough people get to actually enjoy their life. Not many people get to the end of it and think, do you know what? I've actually spent this perfectly. I've got no regrets. I've done what I wanted to do, and I've made a great impact. Unfortunately, not many people get to that. And I think it's because they get drawn into these things that they think they should be doing, that maybe isn't the things that align for what they really want. And that's how I personally felt with my investing. Now, I know a lot of people would say that about their own jobs, but like, look, I'm doing it because it puts money in the bank, food on the table, but it's probably not what I really want to be doing. Well, that's how I was feeling day to day with the trading. Whereas when I made this strategy that just gives you infinitely more freedom, suddenly I got to enjoy those good things. And it's why I still do it to this day. And it's out of all the strategies I've ever done, and it's been many in my life, this is the only thing I still follow. So the normal day now for me as a level 5 investor is I wake up in the morning, I like to get up early, go to the gym, do the things that I want to do for me, have great breakfast, do some work in the morning, lunchtime, have a great lunch. Just as the market opens in the afternoon, I like to be on there a couple of minutes, just have a look at my stocks. Have they dropped enough yet for me to buy some, any good opportunities, or have they gone up enough yet to take some profits? And then I'm done. And then the rest of the day is doing what I want. If it's like supporting my clients in the trade tribe, if it's going to do things I really enjoy doing, spending my free time as I wish. And I never ever would have been able to have this life if I was still doing that fast-paced day trading. So now you know where you sit, and you know what the next level looks like. And if you want me to walk you through the exact system I personally use to stay at level 5, the filters, the process, the buy and sell rules, I run a free masterclass where I break it all down. The link's in the description, and I'll see you in the next one.